The euro tumbled sharply as the Eurozone finance minister meeting failed to deliver. There was no agreement on the package of the 2-year extension, nor was there approval for the next tranche of bailout funds, which has been on hold since June. Eurogroup President Juncker said the discussions in the meeting were extensive, and lasted almost 12 hours. But that only highlighted the deep disagreement the group is facing. There is no clearly confirmed reasons for the delay, but a key issue is believed to be the IMF's decision to grant Greece an extra 2 years to reach the deficit target by 2022. Juncker tried to sound positive and said that the Eurogroup progressed in identifying a consistent package of credible initiatives aimed at making a further substantial contribution to the sustainability of Greek government debt. However, IMF chief Lagarde sounded cautious and only said that, "We have narrowed the positions." Technically, focus will now be on whether today's sell-off of Euro-US dollar will extend back to retest the recent. Speaking at the New York Economic Club, Fed Chairman Ben Bernanke stated that, accumulating evidence does appear consistent with the financial crisis and the associated recession having reduced the potential growth rate of our economy somewhat during the past few years. Yet, he said the Fed lacks measures to alleviate the impacts of the fiscal cliff. He warned that, Congress and the administration will need to protect the economy from the full brunt of the severe fiscal tightening at the beginning of next year, as the fiscal cliff would pose a substantial threat to the recovery, and a fiscal shock of that size would send the economy toppling back into recession. On the economic outlook, Bernanke remained cautious over the employment and housing markets. He stated that, the unemployment rate is still well above both its level prior to the onset of the recession and the level that my colleagues and I think can be sustained once a full recovery has been achieved. While noting some clear signs of improvement, he said that factors such as tight terms and conditions on mortgage loans would continue to dampen the recovery in the property sector. Given the fact that about 20% of existing mortgage borrowers have negative equity in their Bank of England MPC member Wheel said that inflation will likely remain above target for much of the next 2 years, and he thought that additional stimulus would add to inflation, without any corresponding improvement in productivity. And, with stagnant or falling productivity, wage growth of even 2% per annum is at best barely compatible with the inflation target. And he warned that would make people think members of the Bank of England do not take the inflation target seriously. The central bank's minutes will be a focus in the European session today. On the data front, the Australian Westpac leading index rose 0.7% month-on-month in September. Japan trade deficit narrowed to 620 million yen in October. UK public sector net borrowing, US jobless claims and the leading indicator of the University of Michigan sentiment final will be released later in the day.